As of today, August 10, 2026, during live market hours, IREN Limited is trading at $41.55 per share, representing an intraday increase of $3.31 or 8.73% after opening at $39.42 and hitting a session high of $41.88 alongside a daily low of $40.65. Most traders looking at their screens right now see a fast-moving data center player riding a temporary momentum wave alongside major tech names. The common market narrative is that IREN is simply a former crypto mining operation attempting to rebrand itself into the high-performance computing sector. People assume that this sudden surge is just another speculative rally tied to broader moves in NVIDIA stock or general tech hype. However, if you look beneath the headline figures, the reality is far more complex and structured than what retail sentiment suggests. While the average investor treats this as a risky bet on digital assets, institutional capital is quietly positioning around something fundamentally different: power access, high-density data center infrastructure, and massive long-term enterprise contracts. When retail traders open up their Robinhood app or check their Robinhood stock trading account to check standard daily charts, they often fall into a simple expectation trap. They see a ticker that historically moved in tandem with crypto tokens, and they assume its current trajectory is dictated by digital asset sentiment. That expectation creates a clear disconnect from what is actually happening on the ground. The reality is that IREN has spent the past year executing an aggressive structural pivot, transitioning away from pure coin generation toward enterprise-grade artificial intelligence infrastructure. This shift changes how the business should be valued, yet equity markets are still pricing parts of the company like an old-school miner, even as credit markets begin rating its facility assets with investment-grade tags. Let us break down what is driving the immediate trading activity today. The trading volume has seen a notable expansion compared to typical baseline sessions, reflecting strong institutional participation across major platforms. Investors executing orders through their Interactive Brokers trading account or using the Interactive Brokers platform have noted significant block trades hitting the tape throughout the morning. This activity follows recent updates regarding grid connection scale, power capacity expansion, and high-profile cloud contract commitments with enterprise giants like Microsoft and NVIDIA. For active traders using SoFi Invest, SoFi Active Investing, or exploring SoFi stocks, the rapid intraday spread between the morning low of $40.65 and the peak of $41.88 highlights how sensitive this share price remains to macro tech sector sentiment and power capacity announcements. Macroeconomic pressures are playing a direct role in how institutional desks evaluate this stock. Interest rate expectations, energy grid gridlock, and supply constraints on liquid cooling technology have created a unique environment. On one hand, persistent inflation and elevated capital costs make building new data centers extremely expensive for fresh market entrants. On the other hand, established operators who already secured gigawatt-scale power access possess a scarce asset that cannot be easily replicated. When investors review their holdings on Fidelity Investments, manage funds via Fidelity Wealth Management, or evaluate allocations within Fidelity IRAs, they are increasingly forced to ask whether traditional valuation metrics like simple price-to-earnings ratios fully capture the replacement cost of power capacity in 2026. The central tension facing IREN right now revolves around margin transition and short-term capital expenditures. During the recent fiscal quarter, total quarterly revenue stood at $144.8 million, with the AI Cloud Infrastructure segment doubling its contribution to $33.6 million, while traditional crypto mining revenues stepped back as hardware was retired and redirected toward cloud operations. Net income figures showed a temporary loss driven by non-cash write-downs and accounting hedges tied to facility upgrades. Retail sentiment often reacts negatively to headline losses without looking at the underlying cash generation capacity of new cloud hosting arrangements. This creates the exact gap between expectation and reality that smart investors look to analyze. Comment below how many shares of IREN Limited you currently hold in your portfolio and whether you believe their AI cloud pivot will outperform traditional tech infrastructure plays this year. To understand why this gap exists, we have to look closely at what the company actually does and how its core operational model functions. Founded in 2018 and headquartered in Sydney, Australia, IREN Limited builds, owns, and operates large-scale vertically integrated data centers powered primarily by renewable energy across strategically selected regions in the United States and Canada. Rather than relying on third-party hosting or leased space, IREN secures direct grid connections, acquires land, builds high-density power distribution infrastructure, and installs specialized computing hardware directly on-site. Historically, this infrastructure was utilized almost exclusively for Bitcoin mining, where electrical efficiency and low power costs determined survival. However, as the demand for high-performance artificial intelligence workloads surged, management recognized that their secured gigawatt-scale power pipeline was significantly more valuable when paired with modern graphical processing units for cloud computing. This operational background explains why the company is currently expanding its footprint towards hundreds of megawatts of active cloud capacity. They are converting legacy facilities while simultaneously constructing purpose-built liquid-cooled data halls designed specifically to host dense server clusters. By cutting long-term capacity deals with tech giants and providing cloud compute capacity directly to enterprise clients, IREN is shifting its revenue model from unpredictable block rewards to long-term contracted recurring cash flows. This structural evolution is why major brokerages and self-investing accounts across platforms like Robinhood Crypto, SoFi Robo-Advisor, and Schwab Intelligent Portfolios are seeing elevated research activity surrounding this stock. When users review investment options through online investing portals or look for investment help across various investing sites, they often encounter conflicting viewpoints about IREN. Skeptics point to the company's past reliance on digital asset cycles and argue that transitioning to enterprise-grade cloud hosting requires immense capital outlay, continuous hardware refreshment, and intense competition against established hyperscalers. They question whether a company originating from the crypto mining space can maintain operational reliability at scale when serving demanding software enterprises. Conversely, bulls argue that power, not server availability, is the ultimate bottleneck for technology expansion over the coming decade. Developing a grid-connected site capable of drawing hundreds of megawatts takes years of regulatory approvals, transformer procurement, and transmission planning. IREN already holds secured power pipelines totaling multiple gigawatts, giving them a significant lead in time to market. For individual brokerage holders, institutional wealth managers using Fidelity Brokerage, or traders managing positions through the Fidelity mobile app and Fidelity trading platform, this power moat represents the primary investment thesis. Looking ahead at future catalysts and potential scenarios, the market will be hyper-focused on upcoming earnings reports, contract execution milestones, and operational deployment updates. If IREN can meet its aggressive capacity targets and continue converting power access into high-margin annualized recurring revenue, the market may fully re-rate the stock from a speculative asset generator to a core utility-grade infrastructure provider. On the other hand, if execution stumbles, hardware delivery delays occur, or energy costs spike unexpectedly, the stock could experience heightened volatility, exposing short-term buyers to downside risks. For investors conducting online investment research across Robinhood Investments, Robinhood Cash Management, SoFi Stocks, or Interactive Brokers stock trading, keeping a close eye on execution metrics rather than headline market noise remains essential. The market expectation continues to frame IREN through the lens of its past, but the operational reality is being written by its future power footprint and enterprise cloud agreements. In summary, today's trading action at $41.55 reflects a market that is actively debating the true identity of IREN Limited. The surface-level narrative suggests a volatile stock driven by sector hype, but the deeper reality reveals a strategic power infrastructure company systematically executing a high-stakes transition. As power availability remains the defining bottleneck for next-generation computing, the contrast between retail expectations and institutional execution will likely determine where this stock trades in the quarters ahead.